Welcome to Overnight Market Brief Pre-Market Edition by AGI Era. Good morning. Today is Monday, February 23rd, 2026, and it is shortly after 8 a.m. Eastern Time. This is your executive summary of global market developments, analyzing the overnight flows in Asia and Europe, the key macro drivers, and the setup for the North American Open. The prior session and macro context. First, a look back at Friday's close. Wall Street finished firmly in risk-on mode, driven by a retreat in the U.S. dollar amid renewed trade uncertainty. The S&P 500 settled at 6910, up 0.7%, while the Nasdaq 100 gained 0.9% to close at 25,013. Crucially, the session was driven by a broad risk-on sentiment as the dollar softened following a U.S. Supreme Court ruling and ongoing discussions around potential tariff threats. The real story right now is in the macro assets. Right now, the 10-year Treasury Yield is trading at 4.073%, down 0.34%. The U.S. dollar index is flat at 97.722, while crude oil is up at 66.72. The slight dip in yields and a flat dollar are providing a mixed signal for equity futures, with the broader market narrative still digesting the implications of trade policy uncertainty. Overnight session. Asia and Europe. Moving to the overnight session, global markets have been mixed. In Asia, the picture was mixed. In Tokyo, the Nikkei 2225 finished down 1.1%, tracking broader regional caution. Meanwhile, in Greater China, the Seng surged 2.5%, while the Shanghai Composite was down 1.3%. Note, Shanghai Composite data is from February 13th. The significant divergence in Hong Kong was likely driven by specific local factors or a delayed reaction to the broader dollar weakness, contrasting with the more subdued performance elsewhere. In Europe, major indices are trading with a cautious tone. German business sentiment data showed an unexpected rise, reviving recovery hopes, which provided some support. However, this was tempered by Barclays revising its UK unemployment forecast higher. The price action suggests a degree of caution ahead of the U.S. Open, providing a mixed lead-in for U.S. traders. Turning to the U.S. pre-market, equity futures are under pressure. S&P 500 futures are trading down 0.5%, while Nasdaq 100 futures are down 0.7%. The relative performance suggests investors are rotating out of growth-oriented tech names, potentially in response to the lingering trade uncertainty and a lack of fresh positive catalysts. The slight decline in the 10-year yield is not enough to offset the broader cautious sentiment impacting tech futures. Looking ahead to the session, investors are focused on three key catalysts. First, the ongoing U.S. trade policy uncertainty following the Supreme Court ruling and discussions around potential new tariffs, which continues to influence dollar movements and broader risk sentiment. Second, European economic data, particularly the positive German business sentiment, will be watched for signs of regional recovery momentum. And finally, technical positioning will play a significant role given the absence of major Tier 1 economic data releases, potentially leading to volatility driven by short-term trading flows. Given the overnight setup in rates and the dollar, the market's path of least resistance appears to be range-bound with a slight downward bias, pending any further developments on the trade front. That concludes your overnight market brief. Disclaimer: this podcast is not financial advice. Data may be delayed or inaccurate. Always conduct your own due diligence.